In this video, we're going to have a look at H&M, which stands for Hennes and Mauritz, which I'm probably completely butchering the names because I'm pretty sure they're Swedish people, because H&M is very much a Swedish multinational company which is located all over the globe at this point. They are a clothing brand towards the, I think, not too expensive range, not too cheap either. I think they're somewhere in the medium level premium brand, and they are located on the Stockholm Stock Exchange. And what you might have noticed here as well is that the numbers in this financial sheets are actually all quite high. But this is because I am reporting their earnings the same way that they've been reporting their earnings, which is to say by using the Swedish krona. Now, for a quick rule of thumb, I think about €1 equates to about 10 Swedish krona. So if you divide this number by 10, give or take, you will get the value in euros. But you might want to check the actual exchange rate currently at the time that you're watching this video. So right away, what we see here is a increase in revenue growth, a drastic increase in revenue growth. So in 2012, they had a revenue of 120 billion, which has risen all the way to 232 billion here in 2019, an absolute record year for them, and it's come down a little bit since then. But nevertheless, they see an compounding annual growth rate of 5.7% here, which is absolutely very, very impressive for a clothing brand like H&M, and I think it very much shows that the leadership and the direction that they've been going towards is very much working out for them. Very solid numbers when it comes to their revenue growth. Now their earnings is telling a slightly different picture. So they started up with 35 billion euros and they ended up with 37.5. Now 37 was quite the record year. Well, not quite the record year, sorry. 2014 was a record year for them. But they've been coming close to that number again because they've been able to increase their margins. Even though 2021 was not really a record year in any way, shape or form when it comes to their revenue, it was really quite close when it comes to their earnings, which gives me the indication that lately they've been very much increasing their margins and increasing profitability by cutting down on cost. But nevertheless, their earnings growth has been 0.8% year over year here for H&M, which is not really that impressive, I do have to say. On average, inflation is about 2%. So when it comes to that, I think H&M is not outperforming that, but you might see some additional change here in the future. Nevertheless, I do very much like their top line growth, and I'm also very interested to see where their bottom line is going here in the future. Now, what we might notice here is that initially H&M did not have any debt on their balance sheet. Now, what we do see here is a massive increase in debt in 2020, and you might be wondering exactly where that came from. Well, it comes from the same place that we've also seen with many other European companies, which is to say that they have to add the lease contracts, so the lease contracts that have a duration of 5 years or more, and they have to actually add that to their balance sheet in the form of debt, because it's a payment that they're going to have to make in the future. It's an expense that is coming in the future, and they've already written the contract, so they very much have to pay that. So there was an accounting change in 2020 which required companies to put that on the balance sheet as debt. So even though there's a massive spike here between 2019 and 2020, it's not actually because they've been raking up so much debt, it's mostly because they now have to express their leases in their debt statement. So when we go to the next column, what we see when it comes to excess cash is that they always have quite some cash on hand. Now this cash can be used immediately to buy back some of that debt, but they can also just have it for a rainy day or to invest into the future. Nevertheless, I do like to see that they have some additional cash on hand in case any calamity might occur. So this brings us to market cap, and I think market cap is a bit of an interesting story here, because it seems that their market cap has been decreasing for the past 10 years by an annual rate of 2.5%. So we'll get to that in a little bit, because I think there might be something interesting going on, or maybe some interesting opportunities for you as an investor. So that brings us to enterprise value, which is the entire value of the business. So this is the market cap to which we add the debt and subtract the cash. Now, because they have a very low debt, even though they have some additional debt here in 2020 because of the accounting change, still I think their debt is relatively low, and therefore enterprise value is still quite similar to market cap. So that brings us to the EV/EBITDA ratio. How many years does it take H&M to buy back the entirety of their enterprise value? How many years does H&M have to operate before they can buy themselves out? Now, on average, it was about 11.8 times, about 12 times on average, and here in 2021 it's becoming down to 9 times. Same goes for 2018 when it was 7.7 times, an absolute steal, I do think, mostly because their share price seemed to have come down a lot here in 2018. On average though, it has been about 12 times, which I think is relatively accurate for a company like this. They have been growing quite steadily, but the earnings has not been growing that much. Nevertheless, I do think it's an attractive valuation already just by looking at these numbers. So that brings us to net debt to EBITDA. I don't think H&M is at any risk of bankruptcy. They've been managing their debt very well, although it does seem that these numbers are a bit skewed because long-term leases were not included into their debt statement. But nevertheless, even when they are, we can see here that they've been very steadily been under the 3 times ratio, which is what we like to see. We like to have a company that is below the 3 times ratio, so we can assume that it is safe from bankruptcy. Safe. So that brings us to the cash flow statement here. So just looking at the free cash flow, what we can see is a very, very lovely picture, which is to say that their cash flow from operations has been increasing. 10% compounding annual growth rate for the past 10 years. Absolutely amazing numbers here for H&M. And just so you know, in the cash flow from operations, the price of production, the price of materials, the price of all the storefronts, the price of all the employees, everything that is needed to actually run the business on a day-to-day basis is included in this cost. So this means really this is the cash money that they make at the end of the year and the cash money that is available in their checkings account, in their vault. So that brings us to capital expenditure. Now there's something interesting going on with capital expenditure, which is to say that for the past 2 years it's been very, very low, and I think this is a bit fishy, and I do think they probably have to stock up in 2022. So I think their capital expenditure is definitely going to come up. But nevertheless, what we see in 2012, a capital expenditure of about 6 billion Swedish krona, and in 2021 it has reduced to about 3 billion. So on average, even though their cash flow has been growing drastically, their capital expenditure has been decreasing, which is an amazing thing to see. They are very much increasing their margins here when it comes to cash flow, and this is very attractive to me as an investor. So looking at free cash flow, what is remaining after every expense has been made for future-proofing the company as well as the production and anything else? Because free cash flow is your pro rata ownership of the company. At the end of the year, when everything is said and done and all the expenses have been made, all the money that is left in the vault is meant for you as an investor. So what you can do with that is either you buy back the shares, or you divvy it out to investors, or you pay down the debt, or you invest it for future growth. All of those options are benefiting you as a shareholder. This is very much your pro rata ownership. So this brings me to shares outstanding, which is to say there's nothing to say about their shares outstanding. It's been staying flat at 1655. Now with the amount of free cash flow that they're making, I would actually like to see them buy back some shares just to really increase the return for their shareholders. But nevertheless, I won't say too much because I think the free cash flow by itself is already quite enticing. So this brings us to the free cash flow per share, dividing the free cash flow by the amount of shares. Now this is the amount of free cash flow that you can expect simply from holding one share of H&M. Now it does say the euro sign at the end of it. Of course, like I mentioned, all these numbers are in Swedish krona. So divided by 10 to get the actual euro amount. So that brings me to the price per share on the stock market itself. In 2012, there was a price per share of 224 kronas. They reached a peak here in 2014 of 325, and it's been coming down here. In 2021, they have a share price of 178 krona. So now, of course, the question here for us is, why is the price per share coming down? Is there anything that we might be missing when it comes to our future projections? Now we'll look at that in just a little bit. Looking at free cash flow, we can see on average their free cash flow yield has been 7.5%. For the past year, it's been exceedingly high at 14.1% because they booked such an absolute record level of cash flow. I do think this number is going to come down, so we might want to work with that a little bit. But nevertheless, I do very much like the numbers that I'm seeing here. So this brings us into the business of trying to forecast H&M out into the future. So now, when I look at their earnings, I think I can confidently say that they've been able to increase their earnings almost on a year-to-year basis by about 1%. So the revenue has been growing a lot more than that, and I do expect them to increase their profit margins that they do have. So I'm going to actually give them a 1% growth here for the next 10 years, just like they've been doing for the past 10 years historically. And if I do that with the EBITDA from 2021 onwards all the way to 2023, and I give them a 10 times multiple. Now, on average, they've been at around 12 times. For the last year, 2021, they've been below that. And I think 10 is a nice conservative level for a company like H&M, which has been growing quite rapidly. They are not in the risk of bankruptcy, and they do produce quite a lot of cash. So I think H&M is a very interesting company, and personally, I would even buy it at a high valuation, but I'm going to be conservative here and say I'm going to give them a 10 times multiple, because I like to be conservative, and if my conservative estimate beats the stock market, that's when I'm going to be interested in buying a stock. So giving them a 10 times multiple, it gives me an enterprise value of 415 billion Swedish krona, to which we subtract the debt, adds the cash, gives me a market cap of 375, divided by the amount of shares outstanding, gives me a share price 10 years from now of 225 krona and 73 cents. Now we're going to do the same thing with their free cash flow, except for one thing. I'm going to say that their 2021 free cash flow number per share is a bit of an outlier compared to all the historic years prior to this. So I'm going to say this is not a good baseline to start our projection at. And I'm going to say this is going to come down. I'm going to say, like, especially with the economic headwinds that we have right now, that people might not be as interested in buying new clothes as they are in buying basic life necessities like a piece of bread. So I do think that their free cash flow is going to be coming down. So I'm going to start with the number from 2020, which is almost half of what they made in 2021, and I'm going to increase this into the future. So when I actually bring down this last number to be a bit more in line with the historic growth trend, I do see that on average their free cash flow per share has been increasing by about 6%. So what I'm going to do here is, for the first 5 years, I'm going to give them this 6% growth rate, and then I'm going to reduce it to 4% in the years after that, because I do think that the clothing business is a very, very competitive business, and I do not think that they will be able to keep maintaining the growth that they have been seeing historically. So this is my conservative estimate. What we do see here is, even 10 years from now, I do not expect them to reach the cash flow that they reached in 2021. Now, I might be completely wrong with that. I might be completely off base, and maybe my estimate is way too conservative for H&M, but if that's the case, then it's only going to be in my benefit, right? I'm also going to give them a free cash flow yield of 10%, which is way beyond what they've been doing historically, but because the clothing business is such a competitive business, I do like to give myself a bit more of a cushion when it comes to possible headwinds in the business. So I'm going to give them a 10% yield, which gives me a stock price 10 years from now of 209 Swedish krona and 63 cents. Now that we do have these two projections, let's see what the stock is trading at right now. So currently on the market, I can buy as many shares as I want for 129 kronas and 52 cents. This has come down quite a lot already from their high here in 2014 of 325 kronas. And I think it's definitely in the attractive range right now. So given our two forecasts, and I'm going to cut them down the middle because I'm not sure exactly which one is right. I do think they're relatively similar to each other, but I'm going to cut them down the middle anyway and say that in 10 years time I do expect H&M to be worth 217 kronas a share on the stock market. Now I do like to emphasize that this is the price on the stock market, and this gives me a compounding annual growth rate of 5.3%. But of course, the attractive thing about H&M is not their price on the stock market. I think the most attractive thing for H&M is the amount of cash flow, the amount of cash money that they're generating every single year, and the amount of cash flow that you as a shareholder will be receiving simply for holding this stock. So if I buy this stock now and hold it for a decade, I expect us to get all the cash flow that we just projected here as well in our free cash flow model, as can be seen in our IRR calculation down here below. This is the free cash flow that I expect you to receive every single year. So if we include that free cash flow into our calculation, I expect H&M to return us about 18.8% internal rate of return. Now, I always say on average the stock market returns about 10% year over year. So I think H&M is very much beating the stock market by quite a long shot. And I do have to say the estimations that I gave H&M are very, very conservative, right? I gave them a big haircut when it comes to their free cash flow per share. I really did. I also say that their earnings will be growing in line as they've been doing historically, and they might very well be outperforming that. I gave them conservative multiples for both the market multiple as well as the free cash flow yield, and I do think that the free cash flow that they will be generating in the future will probably exceed the numbers that I gave them here. But like I mentioned, that will only be for our benefit. So even with my conservative estimate, I do very much think that H&M is a very, very attractive company right now at the current valuation, and I would definitely be interested in buying this stock. So now let's see what will happen if the price goes up or comes down a little bit. Currently the price is 129 kronas and 52 cents. Now this gives me an 18.8% IRR, which is already amazing, by the way. I do have to say, this number is already very attractive and enough of a reason for me to actually start investing into this company. But let's see, if the price comes down 10%, it gives me an IRR of 21.2%. If the price goes towards the 100 Swedish krona range, I expect an IRR of 24%. Now, if this ever comes true, do believe that I will be buying in bulk shares of H&M. But even right now, I think it's very interesting. Nevertheless, this is of course not financial advice. Please do your own due diligence before you invest into any company. But these are my projections into the future for H&M. So thank you very much for watching. Don't forget to like, subscribe, and all that good stuff. And I'll see you in the next one. Cheerio! Now I do want to make one additional note here for H&M, which is to say that their free cash flow does of course not equal their earnings per share, and I think especially for a company like H&M this is very much true, because the earnings very much include non-cash expenses, and these are things like depreciation and amortization that do come into effect whenever you're looking at earnings as opposed to free cash flow. And H&M, of course, all the things they're selling, every single jean, hat, sweater, jacket, everything is of course depreciated over time. So the same goes for the warehouses as well, and all the things that they own. Depreciation and amortization plays a very large role in the business of H&M, and this is why earnings will be a lot lower than free cash flow. And the same thing goes as well for working capital exchanges, because H&M very much has to buy and stockpile their goods before they're able to sell it, and this working capital change also impacts the earnings but not the free cash flow. So even though the free cash flow is very, very attractive at these numbers, I do like you to take it with a little bit of salt, just because we're looking at a clothing company which is very much influenced by depreciation and amortization effects.